Well, hi everyone. It's my pleasure to be here today to introduce you to a new report that was really needed in the world of entrepreneurial innovation that focuses on the performance of countries, of nations, on their startup ecosystems. It's called the APEXE Nations Report. And the first focus of this report as a pilot is on the G20 countries. So today we have myself, Dr. Chris Haley, who's head of research of Startup Genome, and Matt Smith from Global Entrepreneurship Network joining us to talk to you about this report and why this is going to be useful for ministries of innovation, innovation agencies, ministries of economic development as a scorecard for your work developing these startup ecosystems. So we will do a little bit of introduction and then go right into the methodology and key findings, and we'll leave about 15 minutes for Q&A. So Startup Genome, for those who don't know us, we're the world-leading innovation policy advisory firm and research firm to national governments, to ministries of economic development, innovation agencies, innovation ministries that are committed to really growing, accelerating the success of their startup ecosystems. We've advised now more than 170 clients across all continents and 60 countries to date, which means we've taught them how to grow their startup ecosystems, what policies actually work. But we've learned from all of these countries and cities that have done 35 years of experiments in policies trying to solve startup ecosystem gaps, such as funding, talent, community, to create scale-ups and really develop an engine of job creation and economic growth that is one of prosperity for their whole societies. So the results that we've seen for these clients are very committed to growing their ecosystem and designing the right policies to do that are very clear. Our strategy clients see their startup ecosystems grow 59% faster than their peers. That means 41% annual growth versus 25% for those that don't follow those best practices with us. And on average, that turns out to be about $1.4 billion per year in increased ecosystem value from a starting point of about 9 billion. So really a clear impact. Matt?
Sorry about that. Jonathan should be joining us, but is having some issues. So from Global Entrepreneurship Network perspective, we're an international organization promoting entrepreneurship around the world, best known for running Global Entrepreneurship Week, which was last week. And we're working to kind of foster deeper cross-border collaboration around entrepreneurial ecosystems. For us, this report is particularly timely and a useful addition to the overall kind of research agenda around entrepreneurship policy, and really complements the work of the GSER that we've been working with Genome on for several years. Sorry, I don't know if I have slide control here. Thank you. And move on to the next, thanks. So as a very brief background, we kind of run national affiliates in around 80 countries around the world. So Gen New Zealand, Gen UK, Gen South Africa, and similar. We have national Global Entrepreneurship Week hosts in over 150 countries. We just earlier this month ran a $1 million cash prize Entrepreneurship World Cup with Saudi Monshart and others. We run the Global Business Angels Network, network of networks, and we license the Startup Huddle event format to organizers and communities across 60 countries. Thank you. So I think overall, on the APEX side of things, the evidence is clear, and the demand for national level insights from policymakers has been growing stronger. particularly as the kind of value and insights from GSER has been building in recent years. This, as you'll see from Chris, is a substantial new contribution. There are challenges and trade-offs in designing an index like this. But overall, we think that the overall methodology and the analysis of the national policy measures is kind of a useful addition. We hope this is going to be kind of taken up by policymakers around the world. At the moment, of course, this is a pilot with G20 countries. Very much hope to be working with Genome to expand this to other countries as well. And I'm sure we'll set out some next steps on that later in the call. So without further ado, I will hand back and allow Chris to dive into the findings in more detail. Thank you.
Thank you very much,
previous
Matt.
slide first, maybe Chris, Sam. Yeah, so I think, what we found is that, in this day and age, of course, startup ecosystems have become the #1 growth engine in economies. And tech ecosystem grow about 10x faster than the rest of our economies. And that really translated to an investment in startup ecosystem that have a very quick ROI because you're creating a faster growth for a sector of your economy that is growing extremely fast and leads to exports, and therefore the return on investment is very high. We're talking about 25x over 3 years. And it's the most important investment because traditional R&D has lost its power to drive our economies. Corporations are growing slower. They're reducing their jobs instead of increasing their jobs as they increase labor productivity. And that labor productivity is really created through technologies produced by tech companies. So the question for us as leaders is, where are these tech jobs being created? Are they created in our country or in another country? And so it's urgent that every country really invests to have a local engine of job creation that participates in this new economy and really creates a new path for our youth or smart technical people to really participate in creating these jobs and economic growth in your country. Thanks. Chris?
So thanks, JF. Thanks, Matt. So it's my pleasure to talk you through the details of the APEXE Nation Report, the index. I'm going to explain how we have constructed this. It is rather different than many of the other indices that you may have encountered previously. JF announced the name at the beginning, but just to say this is an acronym standing for Aptitudes and Policies for Exponential Entrepreneurship. Next slide. And really the key question that we are trying to address with this report is how effectively are countries converting their innovation potential into exponential entrepreneurship, into that high growth entrepreneurship that, as JF says, is really driving economies and job creation globally. Next slide. So I will talk you through in a minute what we mean by conversion of innovation potential. But just to say that this is a different measure. No one else has attempted anything quite like this, partly because it's quite difficult to do. In doing this, we have very much tried to normalize the data for different countries by GDP or by population to try to enable a kind of fair comparison between countries. And we can get into the methodology, the details of how we've done that if anyone is interested. As Matt says, this is a pilot. It's a new methodology, but it's also a pilot in terms of only being limited to the G20 countries. And we hope that next year we will produce a much expanded version, which we will launch at the GEC with our partners from GEN. In addition to the index itself, there is an accompanying scorecard, which we will say a little bit more about in a minute. Next slide. So this model helps introduce, if you like, the theory of change, the conceptual model that lies behind the index. So what we're saying is all ecosystems have a certain amount of innovation potential, which typically lies outside the ecosystem. And what we mean by that is it may not be within the remit of a Minister of Entrepreneurship or a Minister of the Economy, but it nevertheless contributes to the entrepreneurial activity of that ecosystem. And to give you an example, that might be things like STEM knowledge production, total amounts of patent production, and so on. Then what governments can do is implement a certain amount of startup relevant policy, and we'll dig into that box in a minute. And the combination of innovation potential and policy gives rise to startup ecosystem performance. If it helps, you can see this in terms of a couple of things, the sort of intermediate stage success factors, things like numbers of accelerators, incubators, early stage funding, which then gives rise to the later stage ecosystem performance, such as late stage funding and exit. For simplicity, though, we bundle those two later components together in constructing the index. Next slide, please. So what do we mean by innovation potential? So very briefly, this summarizes the 6 sub-factors that constitute innovation potential. So as you can see here, this includes not only measures of conventional innovation, so R&D spend, patent spend, and so on, but it also includes what we would consider foundational aspects. So, for example, the rule of law in a country, the quality of regulation in a country, without which it is very difficult to actually sign contracts, get new businesses off the ground. So even though we're calling this innovation potential, just maybe bear in mind that actually this is quite a broad bucket of foundational aspects that help entrepreneurs get new companies off the ground. So as well as knowledge R&D and business foundations, we have certain talent components, such as entrepreneurial intent, which we measure through entrepreneurship measures, numbers of STEM researchers, and so on. We also look at the country's ICT infrastructure, and we also look at the presence of large firms. Some people may see large firms purely as competitors to startups, but in our view, actually, the presence of large firms can be quite helpful as complementers, as suppliers to startups. They're also indicative of the fact that a country has a business environment in which they can operate, shall we say. Next slide, please. So if that was the innovation potential, then this slide talks about the startup ecosystem. And there are 5 sub-factors within the startup ecosystem that we examine. The most important one is performance. And the most important metric within performance is something that we call ecosystem value. And I'll explain a little bit more about that in a second. But performance also includes other measures of exits, things like unicorn counts and so on. In addition, we look at funding. So not only total amounts of funding, but things like numbers of active venture capitalists within an ecosystem. We look at experienced talent. So metrics such as GitHub developers, entrepreneurs who have had an exit and are now working on their second or third startup. We look at global market reach, by which we mean the degree to which startups within a country are looking to expand and to which startups from overseas are looking to establish a second office in that country. And then startup support programs such as accelerators and incubators. Next slide, please. So I mentioned a moment ago that one of the most important measures in performance was something that we call ecosystem value. And I just wanted to take 30 seconds to expand on this concept. So ecosystem value, as Startup Genome defines it, is the value of all of the startups within an ecosystem plus the value of the exits in the preceding couple of years. And that gives us a measure which we call ecosystem value. What this chart shows is how that ecosystem value in a country compares to a country's GDP. it's important not to misinterpret this. Ecosystem value isn't directly a component of GDP. That would be actually the revenue of startups would be really the thing that would actually contribute to GDP. But nevertheless, this is a useful way. It's a crude but nevertheless quite instructive measure of looking at the total value of a startup ecosystem relative to the size of an economy in a country. And what you can see here is you have more than a tenfold difference just within the G20 countries. So this is it's an interesting, it's an important measure. This is not this is only a component that goes into APEX, but it is something that we found quite an interesting measure when we were compiling this. Next slide. So I've introduced the concept of the startup ecosystem score. I've introduced the concept of the innovation potential score. What the APEX index does is it looks at the difference between these two measures. So we actually take a multiple of the startup ecosystem score and then look at the difference between that and the country's innovation potential score. Now, this is something that no other index is trying to do. This is a slightly unusual way forward. But what we are saying is, in our view, countries that have a higher innovation potential, we would expect them to be actually producing more startups. So this is a way of, in effect, handicapping countries or trying to look at the degree to which countries are actually making use of that potential. So some other indices out there would simply add these all together, but we are actually looking at the difference between that innovation potential and then the startup ecosystem potential which comes from that. And we have a term for that which we are calling the Lab 2 Startup Score. If you can go to the next slide, Sama. This chart just shows how those two measures compare across the G20 and a wider set of countries. So what you can see on the very far right grayed out, there are some countries that score very high on innovation potential. And these are some of the countries that you would expect to see in the Global Innovation Index that WIPO produce and some of the other innovation indices. What we are showing here with APEX is that even though they score highly on innovation potential, they are not quite converting that into startup ecosystem value. In contrast, there are some other countries like the US, like the UK, like India, which seem to significantly outperform given the typical relationship between these two variables. And so in part, that outperformance is what will give a higher rank in the APEX index. Okay, next slide, please. So this, again, is just summarizing that lab to startup conversion. So as I say, this is a function of ecosystem value, the difference between the ecosystem value and the innovation potential. Now, just a teaser for the next edition, we have looked at some other countries beside the G20. They're not mentioned in this report. There are some countries that I think will surprise people, such as Nigeria, when we produce the full version of this next year. So this is just a teaser to say, please do keep an eye out for the version when we publish it next year, because I think it will reveal there are quite a few countries that are doing very well given their starting conditions. Now, this is not yet the... Sorry, Jeff, you want to jump in?
Yeah, I just wanted to say that for us, it was important to have a scorecard of the actually activities and the policies of a ministry or innovation agency. And that means it allows, small countries and large countries to be measured the same way, where they have the chance to be a top 10 countries in Africa and Latin America that maybe have a lower innovation potential, but are doing actually very well in creating startup performance. And so, for us, we see it as a positive result of the index that Nigeria, that we know is doing extremely well in startup ecosystem in Africa, is actually among the top, right? They were, I think, just below South Korea on that metrics, and that tells us, okay, we have balanced and normalized those factors enough so that those that do well in startup ecosystems everywhere can be a top 10 countries in this index. And that's really gives you a performance of your inputs versus your outputs.
So if you go to the next slide, Simon, actually, JF, let me hand back to you. Just to say that what we've presented so far is not yet the full APEX ranking. We need to add the policy action score. But JF, do you want to talk through the policy component?
Yeah, definitely. Thank you,
JF,
Chris.
if you don't mind me interrupting, I'm really sorry. We also have Jonathan on the call now. Maybe if we could pause for 2 seconds and I can pass it to Jonathan to say a few words.
Okay. Yeah.
Over to you, Jonathan.
You're muted, Jonathan.
No, no. I'll say a few words when we're done with the presentation, if that's all right. Because I think Samar, I think JF's on a point of. I think we should get to the policy action score.
Yeah.
Thank you, though. Appreciate it.
Okay, so then the lab to startup score is basically you take all your input components and your laws, your R&D, your corporate fabric, and we see if with that input you create a lot of startup performance. And then, this is basically the score that maybe as a new minister of innovation you have been given from your predecessor. And then the question is, what do you do to improve it? And the vector of change, if you will, is policy action. And we wanted to really focus on that and keep that separate to score all of these activities, all of these policy actions against best practices that now we've established, right? We've worked now with some of the leaders like Singapore for years now, for about 10 years, learning what they've done even in the 90s and the 2000s, and learning with our data, which is the best data in the world to look at this, identifying what are the policies, how are they structured, what are the attributes, those that have a big performance in solving funding gap, talent gap, etc., versus the other ones, and using those best practices then to score the policy actions of each countries, and of course then benchmark the policy actions between countries in the APEX index. And the sum of that, or of the labs to startup score plus the policy action score, then gives you the final APEX score and therefore the final APEX ranking. So these policy actions are across 5 different sub-factors. First, of course, funding. Have you created a fund of fund that will really helps you develop your community of venture, institutional venture investors? Have you supported with laws or tax credits or co-investments or other forms of support your early stage investors? So from angels and others. Secondly, the talent retention and attraction that we know, first to attract, having visas enable entrepreneurs, but also talent to come into your country is important. But to retain the talent inside the startup ecosystem, the most potent way to do it is with enabling employee stock option plans to be taxed correctly, which means not at vesting, but at exits, at exercise or exits. Global reach, of course, are you supporting global growth with programs or direct program supports? Global reach also having global connectedness come to your country. So our top startups coming to your countries because it's easy to establish a base and because you've supported it with soft lending programs. Fourthly, of course, support programs. Are you supporting your incubators and accelerators so that they can instill knowledge and bring the community together so that the startup ecosystem is more performant? And finally, community development. And it's a little bit similar to support programs, but those really that are centered at growing the community, creating a center of gravity and density so that people start meeting each other between founders, investors, experts, and learning from each other, but also helping each other. So a sense of community is very important. So some of those policies will be analyzed starting in a few months. And these are the policy action scores. So of course, it varies widely. And even France have not done all of the policies that are possible in the best way possible, but of course performing very highly in some countries are really have, we would welcome them taking more action or structuring their policies for better performance, better impact. And this is, and you probably have seen the report, which was launched a couple of weeks ago, but this is the final ranking of the APEXE G20. So at the left, you see the rank, and on the right, you see the policy actions level. You see it's heat mapped colored so that you can see which ones are high and which ones are lower. And on the very right, the lab to startup position, which is a translation of this innovation potential and startup performance. There's all other metrics, of course, and more data in the report that you can look at. And so the scorecard that we're creating here is, we didn't want to just create a ranking, because a ranking is, a little bit static and not very useful. It's just a feedback on how we're doing. But the most important for us and for Jen is to be able to work with you to guide your next actions. Where have you not acted? Where are your gaps that you want to take, you want to fix, you want to correct, you want to address through action, through policy action? So we've separated a lot of the scoring of the ecosystem and the scoring of the policy actions across funding, talent, support programs, global reach, and finally on the ecosystem side, overall performance, so that you can have a set of benchmarks that tell you where am I, batting below my weight, and what are the policy actions where my peers, other countries have had, a good impact on their ecosystem through implementing a best practice, and where I've not acted yet. And so you can see a combination of both on these two. And that's the APEXE scorecard that we'll want to put in your hands so that it's useful to you in seeing what are your most important gaps in the startup ecosystem, and what are your gaps in policy actions. Jonathan?
Yeah, great. So I think we want to save some time for questions, but apologies, I missed the first 5 minutes. Of course, my Zoom always takes the most inopportune time to decide to update itself, so my apologies for that. But I just wanted to add a little bit of context here. Obviously, from a Gen perspective, as you know, we're very proud to be operating in many of these markets on a very practical level. And one of the things that we witness, especially this time of year when we do things like Global Entrepreneurship Week, and I was out at COP19 and in various other places in the world, and we see so much activity, and so much more activity led by policymakers, that the importance of this report is paramount. From our perspective, we have a responsibility in the field to be as precise and to be as supportive as we can, because the first rule is do no harm. And if you're controlling significant resources, departments, and the energy of your teams, we want to make sure that that is guided as much as possible. So I think the big point that I want to emphasize that I think Chris made at the outset is what's different about this is we're trying not just to look at your output, but your output relative to your potential. And I think this becomes, a vital element for many of the countries around the world that have sometimes said to us, it's very difficult for us to see relevance for us when we're always going to be in the bottom 25% of the economies when it comes to, total number of startups. So I think the message here from a Gen perspective is we have to start with people where they are and help them to improve using the resources and capabilities that they've already got, rather than just measuring the output. And I think, on behalf of the Gen team, we really value our collaboration with Genome in implementing this. I would just, add, one other observation, if I can, and that is that I think from our perspective, at Gen, we need to look a lot more at the Nigerias. So looking more at the countries where there's the greatest amount of potential for growth and contribution to the global innovation ecosystem. And I think this report allows us to have that story and that narrative possibly with everybody else. So I do want to stress that the mission ahead will be that we can have this conversation with more countries outside the G20, and that obviously our mission will be to release a global report, as was mentioned earlier by Chris, at the Global Entrepreneurship Congress, the next one being held in the United States in June of 2025. And so we welcome that dialogue on different levels. And most importantly, to turn over to questions, Sama, perhaps, I think most importantly, we'd love everybody's feedback, particularly on the methodology approached here. As Chris said, it's an unusual thing to do, not adding up these elements, but rather comparing them and integrating them. So I think we welcome your thought. Thanks.
Perfect.
So here you have a few of the emails addresses where you can send feedback, and you can ask also for your scorecard and how can you be in the report if you're a country that's not listed yet at APEXE@startupgenome.com, and that will reach both the Startup Genome and the Gen team. And for any question, you email Francis. Thank you, Sam.
Perfect. If everybody can just give me 1 second, because I see there are 5 Q&A or 5 questions in the Q&A section, but I can't seem to access them. So just 2 minutes of technical difficulties here as well. In the meantime, why don't I pick some questions that a lot of the people that are attending today were kind enough to send us on the RSVP form that we can tackle first.
Okay. I see the Q&A if you want me to read from them.
Yes, please, while I figure that out.
So we have a question about whether we plan to analyze the BRICS countries versus other G20 countries. And is there a place to access the report? So the report is available at startupgenome.com. If you click on reports, and I think maybe it's on the homepage right now. So it's very easy to access. All our reports are free, along with Jen's report and our joint reports, of course, because we're here to help and provide as much information to everyone as possible. BRICS countries will be added, and I think it is it's a lot of work for us to add a country. So we want to talk to you, and also we'll have to have some availability of your time, your leaders' time, to be able to really do a policy audit. And then you'll have all of the set of benchmarks for a new country against the G20, but as you grow it against all the countries in the world. Another question was whether for non-G20 countries, is it the same process to calculate the score? And yes, of course, everybody will be on the same basis. And we're very pleased to see that, how we normalized to GDP and populations allowed us to put all of the countries on the same platform to be analyzed correctly of their input versus their potential. Because for us, it was very important that as we rank cities, we've ranked 3 cities now for 12, 13 years, we see that's always the same at the top, right? Those that have great innovation potential, lots of great quality R&D talent, lots of patent production, great corporations that do a lot of R&D, those always end up at the top at the ecosystem side. And we wanted to make sure that it was a new scorecard that allowed you to see for what you have in terms of R&D, how much are you doing in your startup ecosystem, and that can be a scorecard for all countries on the same platform, and we have achieved that, and we're very proud about that.
JF, let me add something to that question if I can. Because just to re-emphasize and underscore that, one of the things that I know some people ask, are you going to be using the same rules for countries that are smaller and have less of an impact compared to the United States? And obviously that's a loaded question, because it essentially says it's not fair. But I think what's really important here is what we love about this model is that it is going to be much more useful for all of the countries that we've got engaged in the process. So I think, as JF mentioned, we will use the score, but we will be using the same methodology across the world. But I think it's going to be a lot more relevant than sometimes some of the other reports that we've been involved in. One of the things I should just mention is that this is not the first report that Jen's done where we've done national rankings. As you know, we used to do the Global Entrepreneurship Index. We've tried different reports, but one of the things we found that was challenging with that was that it was less useful to the bottom 60% of the economy. So I think that it's important to emphasize that it will be the same methodology, but we think this time that's going to be much more relevant for some of the smaller economies.
One of the next questions is asking us to elaborate more on funding fund of funds. So maybe I can screen share slide 20 for your reference, team.
I mean,
well,
I
it's just
can
about
maybe
fund of funds, so we're not going to have a slide that really talks about that too much, Sam.
Yeah, but I think that we are referring to this particular metric. Anything to add right now? Yeah.
I mean, super briefly, we have looked at the presence of funds and how substantial a fund of funds is relative to the size of a country's economy. This is one of the measures where we would love to actually get more sophisticated over time. So as Jonathan said, one of the rules for policymakers should be do no harm. And I think there is a very interesting question about how and when a fund of funds may become too big and might actually start doing damage to a country, incentivizing bad behavior by VCs. So that is a measure where we are definitely hoping that we can get a bit more sophisticated over time. But very happy if you have particular interests, Roberto, in understanding fund of funds, please let's have a follow-up conversation on that.
Yeah, and right now, we look at fund of fund as an amount of capital that is put there, allocated to create a community of venture capital investors that become experts at that. It's very hard to invest in startups. What we've seen also is some that put so much money in there in a second time, a third time, where they refund the fund of fund, where there's too much money chasing too few deals, and the returns of those venture capital firms actually drops, and therefore that actually hurts the development of an expert community of venture investors. And so we want to gauge this correctly. In the first step, we've not done it, but as we move into 2025, 2026, then we'll start, also ranking the size. Is it the right size versus the size of the ecosystem? But also, are there too many constraints? Right? We've seen also a lot of fund that were too constraining, and therefore again hurting the venture capital's ability to develop. So all of this will be scored as we move forward.
One of the next questions is asking what are the conditions for countries overperforming than expected, and what we think are impediments to countries like Japan with the strong innovation potential but underperforming in creating startup ecosystems.
Yeah, so in what we've seen is the countries that are even performing higher than the United States and the UK, and some are above. When we look at the list of 80 countries, is they've started very early with very powerful policies back in the 90s to really build those pillars of the startup ecosystem: the funding, the talent, the startup experience, and the founders community. And so those that have overperformed are usually those that invested early and continue to invest over the last 20 and 30 years. Countries like Japan have not done that. Right? They've recognized for great R&D, great corporate fabric that does a lot of R&D and innovation, but their investments in startup ecosystem has been very recent. Now they're investing aggressively. Right? Recently, the governor of Tokyo announced $2 billion to invest in startup ecosystems. So they're moving in the right direction. You've seen it in our city rankings with Tokyo really coming into the top 10 from the top 40 a few years ago. But when we look at their performance in startups versus the innovation, it's still very low. And we see Tokyo the top 10, but they have a lot of great other cities. It's a large city, it's a large country, right, with only one economy, one city in the top 10, none others in the top 40. When you look at Canada, you have 3 cities in the top 40, right? And you can see rapidly that Japan is underperforming in its startup ecosystem versus its potential, its size, its GDP, and the quality of its R&D and its talent.
Yeah, and I'll add to that because I've just come back from Japan where we met with a lot of the cabinet staff for a couple of hours. And one of the things we look at the potential, for example, is that we also do an AI regulatory review, and Japan still scores highest in the world in terms of the shall I say the fewest constraints by disruptive entrepreneurs in the generative AI space. So especially compared to Europe, for example. So it's just another example of how there is immense capacity or potential. And so the value of a report like this, I think, as JF has emphasized, is that we can point to very specific things as to how to better capitalize on that potential. So, for example, in the case of this particular example I gave, we're working very closely with Google on their new campus in Japan, and how that is going to be rapidly leveraging that particular asset. So, it's more around what Chris was saying and Matt was saying about we want to make sure that we're helping people to maximize the potential of the circumstances they've got, because so many of these things take a long time to change. If you've got a very challenging regulatory environment, as you do, for example, in Europe, it takes a long time to change that if you want to change it, and if you can maintain the momentum and the sustainability to change it. So most elected officials and policymakers and ecosystem leaders are interested in performance over the next 2 to 3 years. They can't just look at 10 to 20 year horizons. So this is why understanding how to make this connect much better is important.
One of the next questions we have is, what industry has the highest failure rate for startups?
We're not going to go into that for the APEXE report. That's really a GSER question. And failure rate is very hard to assess. Failure rate is above 90% in every subsectors. And the goal is really to create more bigger success rather than lowering the failure rate. Failure in startups is normal.
I do believe JF and Jonathan, sorry, go ahead, Chris.
I was just going to say it is worth mentioning, maybe, JF, that GM has produced a couple of sector-specific reports as well, though, in the past. So if you do want to go to the Startup Genome website, you can see, for instance, sort of some deep dives on things like clean tech and so on. But APEX is sector agnostic.
Perfect. JF and Jonathan, I do think you had answered the previous question a bit broadly, but we do have a follow-up, which is really focusing on what drives some developing countries, such as India and Mexico, establishing great startup ecosystems, in contrast to some of the developed countries that are underperforming in the same area.
Yeah, good question. I think India is a great example, right, of how the APEX report allows for countries that are large and where the R&D, maybe they're not known for the best R&D in the world, to end up among the top. And India has really had a lot of impetus from the private sector to grow startup ecosystems as a way to develop economic independence for these founders to create wealth for themselves and their teams. And the countries has supported that with policies and good laws, and we've seen the impact. And so for all the countries, always the same theme is, have you been supporting your startup ecosystem for years? And we know that the national government, with a lot of agencies like Invest India, for instance, have supported the development of startups for years at a large scale, and we see it in a few big cities, right? Bangalore is a top almost 20. It was a top 20, top 22, I think. Delhi now is top 23. Mumbai is 35 or something, right? It's paid off for this country in betting on its startups and investing in the startups.
I'll just add one other thing to that. One of the things we've noticed in those markets, I mean, India is another good example, is that, we sometimes underreport this, but the sheer benefit of just a much larger deal flow. It's one of the reasons that at Gen, we spend a lot of time trying to get more people kicking the tires of forming teams, testing ideas, innovating, as I say, trying to move prototypes to startups, because there's no question about it. If you've got a much higher volume of deal flow, which a lot of those countries do, then your success rate is going to be a lot higher. Sama and JF, Chris and Matt, I'm going to leave the final questions on the Gen side to Matt, but I'm going to head off for the final few questions. But I just want to stress we're fully committed, Genome and Gen, to this mission of providing a next generation most useful analysis that at the end of the day is going to help more people start and scale companies, but it's going to grow economies through the emergence of the innovation ecosystem in more markets. So we welcome this as a continuing conversation, and we look forward to seeing many of you at the Global Entrepreneurship Congress, where we will come to the second edition of this, but also where we can continue that dialogue about how to continue to improve the usefulness of the overall analysis that the fantastic team, particularly at Genome, has been doing on a lot of the deep work. So thanks very much indeed.
Thank you, Jonathan.
Thank you, Jonathan.
I see a question from Bill Barber. Hi, Bill. When analyzing performance in tech development, value creation, and delivery, do we include technology asset acquisitions, licensing agreement? So, when we look at startup ecosystems, we look at exits that are more traditional, right? IPOs, M&As. If there's an asset acquisition that is quantified in one of the big databases, of course, this can be included, but typically it is not. And usually licensing agreements, licensing of IP, which is really more of the traditional innovation ecosystem rather than the startup ecosystem. Oftentimes the acquisition of startups are done through an asset acquisition, and in that case, they would be counted as long as they're in the database and have been reported, of course.
We have some comments from Bonnie. Hi, Bonnie. We'll make sure to follow up on these afterwards, because I saw your follow-up note that they're not quite questions. And so the next one is, which country has the best ecosystem in Africa?
Well, that's something that you will want to see in the next report. But I think it's the usual suspects, but a little bit also some surprises. As I showed here, Kenya was among the top. Nigeria was among the top. Kenya is also among the top. So these two are high performance of their startup ecosystem versus their innovation potential. So that gives you two, and I'll keep the other ones in my back pocket.
Maybe JF, just to add to that, it is very possible that a country may have one very high-performing individual city, and yet the country overall does not necessarily perform terribly well. So the APEX index maybe should be read alongside the GSER. The GSER talks about individual city-level ecosystems. This is very much Ahmed talking about the country level performance as a whole. So just to distinguish that point.
Also, when I say Nigeria and Kenya are ranking highest in the lab to startup position, right, converting their innovation potential into startup performance, we've not ranked their policies yet. So as you see, the policy factor really is a potent variable in here, because we want to reward countries are actually taking action to grow the startup ecosystem with a higher ranking, showing that they are on a different vector of growth because of those policy actions that we know will contribute to growing the performance of the startups and the number of startups.
Jeff, I wondered whether we could actually skip to Amanda's question next, and I wonder if you would like to take that. So Amanda asked an interesting question about San Francisco and the culture there. We do have, Amanda, some measures of connectedness, and we have tried very much also to look at entrepreneurial attitudes and mindset as well. But JF, maybe you can comment on this, not only as a fellow San Francisco inhabitant, but as someone who believes strongly in the power of connectivity.
Yeah, and as we live the ecosystem, I mean, Startup Genome was created by founders like me and Bjorn and Max and others, thinking about what do we see is actually helpful in each city. And startup ecosystem are really a city thing, right? You have a certain culture at the city level, you have a certain connectivity with investors and other founders, and ability to attract talent that are local. And so we've quantified those, from 2012 and 2011, our research looking at what are the factors under the control of the founders and what are the factors in the ecosystem that contribute to success, and being the first to quantify things like local connectedness, where we did quantify the connections between founders and investors, founders and experts, advisors, how many mentors do they have, etc. And also creating an index of what we call sense of community. And I was quantifying very directly how many hours do founders help each other every 2 weeks. We ask a question very simple of like, how many hours did another founder help you in the last 2 weeks? How many hours did an investor that did not invest in your company help you? How many hours did an expert, an industry expert or a business expert, a mentor has helped you, and you're not paying that person as a consultant, they're just helping because they feel like they want to give back. And so this is the local connectedness index. We've also created a global connectedness index because we see that having access, being able to tap into the global knowledge, especially from other cities, earlier stage ecosystem, into knowledge that is present in Silicon Valley, in London and New York, for instance, is very important in being able to create scale-ups. We've also quantified that inside the Global Connectedness Index. And all of those you can see in the Global Startup Ecosystem Report. And all of these are ask us to create data, and that cost us about $1 million a year to create that data across 30, 40, 50 cities. Every time we did a global survey, we've done 5 of them, and we're about to do a new one this year. Hopefully you'll hear about it and want to participate for your city. But at a country level, then that model breaks down, right? My professor Michael Porter has defined that connectivity was the second most important aspect of the performance of an industry cluster, a business cluster, which is what an ecosystem is, right? It's an economic community. But at the country level, then it breaks down, because we'd have to, measure connectivity in all of this big cities in a country and then average it out. But the cost of just creating that data would be, astronomical, right? If it cost us, $1 million to create the data for 50 cities, you can imagine if we have to do it for 300 cities, right? It's almost impossible, and therefore it's not calculated in the country, because at the country level, connectivity is not a real national factor.
As we're now inching towards the end of the webinar, with just a couple of minutes on the clock, maybe if I could pass it back to you, JF and Chris and Matt, just to close us out for the evening.
Chris?
Thank you. So just a couple of words from me to reiterate what we said a moment ago. This is a new attempt, a new methodology. It is a little bit of an experiment. We would very much love your feedback. We want every edition of this index to keep getting better and to keep getting more useful. So please do have a look at the report. Please download it. If you have questions about the methodology, please do direct them to us. If you have thoughts about how we can improve it, again, please do have a conversation with us. We're very open to that. Matt, JF?
Yeah, so we would love to take this. If you're a country that's already scored, we'd love to go deeper with you so that you can understand your performance on the different factors of the startup ecosystem, your performance in terms of creating policy that follow best practices to address those gaps in the ecosystem and increase the number of startups and the performance of startups. And if you're not in the report, then please do reach out with us so that we can, start a audit of your policies and create all the scoring so that you have this scorecard in your hand to help your work, because all of us at Startup Genome and Global Entrepreneurship Network are there to help all of the countries develop this engine of job creation, economic growth that is entrepreneurial innovation. That's our mission. We do this, our whole every year for now more than a decade, and we love to help and see your country really catch up if you're fallen behind a bit, so that your next generation really can participate in the new economy in a bigger way than the current one.
And from my side, just want to say, we are incredibly excited by this new contribution to research and insight. It's great to see the conversation and discussion that it has generated just in the last 45 minutes to an hour. And just want to reissue that invitation to join us in Indiana next year in June for Global Entrepreneurship Congress, where we will launch the full reports and dig into this and so much more around entrepreneurship policy, practice, ecosystem building. So thank you from the perspective of Global Entrepreneurship Network.
Thank you, Chris. Thank you, Jeff. Thank you, Matt and Jonathan. Thank you all for joining.
Thank you, Sama.